When the time comes for you to start your tertiary studies, you might be quite confronted by the costs that you'll have to face if you want to sit the course. If you've just come out of school, it may also be unlikely that you'll have the full amount of savings yet to pay for each semester as they come. This is where you might start looking at a student loan. In Australia, there are three main loan schemes that students can apply for. There's HECS Help, which is a loan for students that are enrolled in a Commonwealth Supported Place, or CSP. This basically means that the government subsidises or helps to pay for some of the course you're enrolled in. Often, but not always, this type of student loan would apply for courses at public universities. Fee Help is for students enrolled in a course that is not subsidised by the government. Often, but not always, this type of loan would apply for courses at private universities. And finally, there's VET student loans, for students enrolled in vocational education and training courses. Often, but not always, this type of student loan would apply for courses at TAFE colleges. What's important in all of this is that you make sure you research which loan is relevant for your course. You should also know that these loans can only be used to cover academic expenses and not extracurricular or lifestyle expenses. Now, to be eligible for a student loan, the government has some criteria which you must meet before it can be approved, like being an Australian citizen. This information is updated regularly on the government's Study Assist website. Other types of student loans that are worth mentioning include OS Help, which is a loan available to students enrolled in a CSP course who want to undertake some of their studies overseas. OS Help can be used for a range of expenses such as airfares, accommodation, and other travel or study expenses. SA Help is a loan scheme that assists students to pay for all or part of their student services and non-academic related fees. This can cover costs such as food, sporting, recreational activities, and even financial advice. A benefit of student loans that people may sometimes allude to is that they are interest-free. This is true, but they also don't come without a cost. The Australian government provides student loans indexed to inflation. This fancy term basically means that your loan principal will grow each year in line with inflation. Over the long term, Australia's inflation rate has averaged to be about 2 to 3%, and this is a reasonable expected annual growth rate for any remaining loan balance. For example, if the principal owing on your loan is $5,000 and the inflation rate for the year was 2.5%, your loan principal will increase by $125. To apply for a student loan, you'll need to fill out an application form, which can be sourced through your educational institution, and you must include your tax file number. Once you've completed your course and you start earning a source of income, the government makes it compulsory to make certain repayments if your annual income is above a certain amount. The income thresholds and repayment rates change from year to year, and you can find this information on the Australian Tax Office website. So let's say you've started working, you have a student debt of $20,000, your annual income is $60,000, and the repayment rate for your income threshold is 5%. This means that you have to repay the government $1,000 for the year. Away from compulsory repayments, you can also elect to make voluntary repayments to help in quickly reducing your student debt. This can all be managed through your MyGov account, which has an up-to-date record of all of your accumulated student debt and can also allow you to organise repayments. Finally, it's worth doing your research or consulting with a tax agent to find out if your loan repayments qualify for a tax deduction. Repayments under some loan schemes may sometimes qualify. And that covers student loans. If and when the time comes, make sure you apply for the right one and that you establish some sort of plan of how you intend to repay this debt.